Welcome to our channel. In today's video, we'll explore some of the best inflation-proof investment strategies to help you protect and grow your wealth in uncertain economic times. Whether you're a beginner or experienced investor, this video will provide valuable insights. Make sure to subscribe for more expert tips. Number 5, diversify your portfolio. Diversification is a fundamental principle in investing, especially during inflationary periods. When inflation increases, the value of money decreases and certain investments may underperform, while others may thrive. A diversified portfolio spreads risk across different asset classes, reducing the impact of inflation on your overall investment strategy. By holding assets such as stocks, bonds, real estate, commodities, and cash, you ensure that even if one sector is negatively impacted by inflation, other investments may counterbalance the losses. For example, stocks can be affected by rising costs, while commodities like gold and oil often perform well when inflation is high. Bonds, on the other hand, may lose value as interest rates rise, but real estate can offer protection through rental income and property appreciation. By carefully selecting assets across various industries and markets, you can create a more resilient portfolio. Additionally, international diversification can help mitigate risks tied to a specific country's inflation. Therefore, a diversification allows you to better manage inflationary pressures, ensuring that no single economic factor severely impacts your financial goals. A well-diversified portfolio enhances long-term growth potential while reducing the overall volatility in your investments. Number 4, real assets. Real assets, such as real estate, commodities, and precious metals, are particularly valuable when inflation is a concern. These assets typically retain or increase their value over time, serving as a hedge against inflation's eroding effect on purchasing power. Real estate is one of the most common real assets used for inflation protection. As inflation rises, property values and rental incomes tend to increase, making real estate a solid investment choice. Moreover, real estate provides income through rents, which often adjust with inflation, providing investors with a steady cash flow. Precious metals like gold and silver have been used as a store of value for centuries and are known to perform well in inflationary environments. As the value of fiat currencies declines, the price of gold and silver often rises, making them an excellent hedge. Commodities such as oil, agricultural products, and metals also benefit from inflationary pressures because their prices typically rise when inflation accelerates. By investing in real assets, when investors can preserve their wealth and achieve a return that keeps pace with or exceeds inflation, safeguarding their purchasing power over the long term. Number 3, inflation-linked bonds. Inflation-linked bonds, such as Treasury inflation-protected securities (TIPS) in the U.S., are specifically designed to protect investors from inflation. These bonds are unique because their principal value is adjusted in line with inflation, providing a hedge against the eroding value of money. The principal value of TIPS increases with the Consumer Price Index, CPI, ensuring that the bond's value keeps pace with inflation. In addition to principal adjustments, TIPS also pay interest, which is calculated based on the inflation-adjusted principal. This means that as inflation rises, both the principal and the interest payments increase, providing investors with a growing income stream. TIPS are backed by the U.S. government, making them a relatively safe investment choice, especially during periods of economic uncertainty. Unlike regular bonds, which lose purchasing power when inflation rises, TIPS offer protection by ensuring that the real value of the investment is maintained. Furthermore, TIPS can be a valuable part of a diversified portfolio, offering a reliable source of income that grows with inflation. For investors seeking inflation protection with a low level of risk, TIPS present an attractive solution. Number 2, dividend stocks. Dividend-paying stocks are an effective strategy for protecting investments from inflation. These stocks offer regular income through dividends, which can increase over time as companies grow and generate higher profits. In inflationary environments, companies with strong dividend histories often have the pricing power to pass on rising costs to consumers, which helps maintain or even increase their profit margins. This ability to generate consistent earnings, even during inflationary periods, makes dividend stocks a valuable asset for long-term investors. As inflation pushes up the cost of living, dividends can provide a steady income stream that helps preserve purchasing power. Additionally, dividend stocks in sectors like utilities, consumer staples, and healthcare tend to perform well during inflation because these industries often deal with essential products or services that maintain demand regardless of rising prices. And the reinvestment of dividends can also compound returns over time, further enhancing the long-term growth potential of a portfolio. Furthermore, dividend stocks can outperform inflation in the long run, as many blue-chip companies increase dividends regularly, providing investors with returns that exceed inflation's impact. Dividend-paying stocks are thus an excellent option for income-focused investors looking for inflation protection. Number 1. Invest in growth. Investing in growth stocks is another powerful strategy to protect against inflation. Growth stocks typically represent companies with high potential for earnings expansion, often in sectors like technology, healthcare, and consumer goods. These companies tend to grow faster than inflation, meaning that their stock prices rise at a rate that outpaces inflation's impact on purchasing power. During inflationary periods, growth stocks can offer the possibility of substantial capital appreciation, allowing investors to achieve returns that exceed the cost of living increases. One of the primary reasons growth stocks can outpace inflation is their ability to innovate and expand into new markets, driving revenue growth even when economic conditions are challenging. For example, technology companies often create products or services that become integral to consumers' daily lives, enabling them to maintain a strong market position despite inflation. Healthcare companies, yet especially those in biotech or pharmaceuticals, can also experience rapid growth due to advances in treatments or products. By investing in growth stocks, investors can position themselves to benefit from long-term trends and innovations that drive economic growth, ensuring that their investments continue to deliver returns that keep pace with or surpass inflation. Thank you for watching. We hope you found these inflation-proof investment strategies helpful. Don't forget to like, share, and subscribe to our channel for more financial tips and updates.